tonight we will talk about what is the coming months ahead energy and what will the forecast on the global trends be. Okay, if you are new to our platform, this is our 14th episode already. We have started since last year, and we also have a membership now for our members where they will get early access to the recording and also to our slides as well. So I hope that for all those that you have started to call in this year, next year you can also join our member. We would like to welcome you to our family as well. Okay, so yes.
And I also want to add, you also join our Telegram group if you are a member, where you can ask questions, and I'll also be coming out, sharing news as they come out.
Yes, that's right. That's right. So actually the forecast that we have is we wanted to use both methods on Chinese astrology and also the trend research. The Chinese astrology part is done by me, and trend research is done by BC. So we combine these two methods to synergize on the forecast itself. So I think we are one of the first to really do this, to synergize the two different subjects together to get a better forecast in economic, financial, geopolitical events to help you out to do better investment decision. And we also have a lot of investors and also traders that join our platform as well, because I think for traders also they need to be very much informed on the global trends in order to make the trade decision. So this month, the upcoming month, August 2023, is a very exciting month. It's a month of adversity and danger ahead from the hexagram that we have. Normally, I would derive all these themes of the month through the hexagram one, because the hexagram will tell a story. Okay. The talk agenda tonight will be, let me just put it into a presentation mode first. Okay, hold on for a while. Okay. Yeah, so that I can draw, I can annotate. Okay, so the talk agenda, as usual, we will start with the introduction, which I have already done. So next is that we will do some disclaimer and then brief recap of the July's energy last month, where we are. We will always check back that, where we get it right, especially PC is very particular about this. Then after that, we will go into the influence of the 5 elements energy in August through the 4 pillar charts, the year, month, day, and hour chart. And also I will go through the hexagram of the month, what it tells us. And this month, BC will do the geopolitical and financial forecasts based on his trend research. Okay, then we will summarize the whole thing for what are you going to expect? What will you be expecting in the month of August? Okay. Can you hear me loud and clear? Can you give me can you give me a 1 if you can hear me loud and clear? Okay, good. Thanks for the feedback, Jeremy and Win and Esmer. Okay. So yeah, this is the disclaimer that we wanted to put in for our audience here. The content is purely based on our study in the global trend and related to the 5 elements in Chinese astrology for you to use as a guideline in your investment decision. And we would like to advise our audience here to exercise caution in investment, especially in such volatile situation, and do your research very well on the company that you want to invest, not just because of the guru says, hearsays, or whatsoever says. Because I personally, I know people, my own relatives that has lost millions just because of following some investment course. So that's why don't just follow the guru. You have to learn how to do the research yourself. Okay. And in this platform, we will not give any advice on the stock because we are not financial advisor, and also it's not, we will prefer that our audience here do their own research. Okay. Yeah. Hi, I'm Christine. Good evening. Okay. So here we will recap on the July's energy. So July is actually a pure pillar. So if you look at the energy here, it is, let me just highlight. Okay. You can see both heaven and earth. If you are familiar with 八字, like the 八字 birth chart, here in July, we have an energy of top heaven, and also earth here. Heaven and earth is actually pure earth. That's why we expect property market challenges. Based on the 5 elements, actually the earth represents, one of the things that they represent is property. If you want to know that what each of these wood, fire, earth, water, and also matter represent, you can go to my YouTube channel on this one, that I have already made a YouTube channel on what industries is represented by these elements. Some are more descent. That means they are clearer, that you can, put them into the 5 elements. Because in the modern world, we also have very complex industries. So some of them are not so, so this one that, we can purely categorize them under one element. There are some of these that are in gray area, no doubt about that. That's why you can see you go to some teachers in Chinese metaphysics, they will say this belongs to fire, but some other teacher will say that this belongs to earth. So sometimes there is a little bit of gray area here. So the one that I put in is definitely is very clear one. Okay, so wood and fire, the whole Li Chun chart of 2023 on the February 4th, which will govern what the year looks like, also shows strong fire, strong. That's why it's like wildfire and forest fire like this. Okay. And the food supplies shortage starts to come in already, because we have quite severe weather condition in the summer months where there are also pure summer fire pillar, and also the inflation also kicks in. It never gets better in July as forecasted. Let's look at the headline. I have a sister in Toronto. She's Toronto. The wildfire is mostly in Quebec area, but they can, it's quite, actually, if those have been to Canada, they know how big it is. It takes about 4 to 5 hours to travel from coast to coast, east coast to west coast. So by flight, so even there also they can, they can smell. Sometimes they can smell the smoke from the forest fire, and sometimes it's quite blurred, and this is especially bad. Okay. This space obsoleted, because I think this also in line with period 9, where people will be using space very differently. Okay. And okay, the wildfire also could drive the wild estate, because these are all like ripple effect. The wildfire also could drive the real estate correction. In this case, where the insurance will also goes up. Okay. And the weather condition and all this is dry, so the risk of having fire is quite high, so insurance also go up. And then the access to loans, the cheap loans is also is also no more, because slowly the interest rate will climb up. I remember many years ago, once upon a time, when I bought my first property many years ago, the interest rate was like 10%. Okay. I think that one is new. It's early 1990s. when I bought my first properties. So I maybe, we have that trend again, and we are so used to, so many decades of low interest rate now, and now the thing has also reversed. Right, PC?
Yeah, I think one of the thing is that the because of the since 2000, the year 2000, a lot of the financial crisis or recession has been, solved through more monetary easing, printing more money, bringing down interest rate, and it just make people more less willing to save and spend more. And I think also in especially in Asia, people are more susceptible to spending first rather than ensuring they have the money to spend. And that caused a lot of people to be quite indebted, especially through credit card and such. And when the banks start to increase interest rate, then suddenly, people find that credit card interests have gone up, the housing loan has gone up, and expenses have gone up because of inflation. So this actually has caused a lot of antagonism among a lot of consumers. In US, it's much worse, but here our interest rate is still a bit low, especially in Malaysia.
Under control.
But then, the weak ring, because of the low interest rate, is causing weakness in the ringgit. And what we have then is actually inflation in consumer goods. Okay, so it doesn't solve anything. If let's say Bank Negara increase interest rate, then a lot of people who actually own a lot of properties, during the last 20 years, a lot of people invested in properties, then they would actually face a lot of problems. If let's say, Bank Negara keeps on hiking interest rate.
They have not paid up lah. Those that have not finished paying lah. Yeah.
Yeah. So especially, that in the last 20 years, there's a lot of young people who take out a lot of loans here because they join those group buy, those
that's right.
guru and all those, some, like the older generation, they pay the deposit, then the loan that they take will be smaller, then they spread among young people. Then I attend one of these group buys, and then they have young people. I'm 32 years old, but I own 100 properties. These are the people that will be quite badly affected, especially when you are taking 100 properties. Means that you actually have a loan on a few properties. Okay, by right, if you can rent those, then maybe you can you can make some money from it. But then I think another thing is that a lot of people invested in apartments, especially in city area, because of the Airbnb thing. And Airbnb right now, the name is already very bad for Airbnb. And a lot of people now prefer to stay in hotel because they find that some of the apartments that they rented is in very deplorable conditions. Okay.
Yeah, and also not safe also. The security is not there. Actually, yes, that's true. So it's really quite bad. I think in this it will trigger a fire sales also.
Yeah, and in fact, in US, the major cities, the revenue from the Airbnb compared to, I think, compared to a year ago is down by 30 to 40%.
Okay, yeah. And also, I think those who take up loans, they cannot stand the interest rate anymore. Sooner or later, there will be a lot of people disposing properties. So y'all can watch out for those that, that can. This also shows that India is also the rice export has been, they banned some of the rice. And I think Thailand, Vietnam also the other time we put in our chat group, it's also having quite, bad weather, and they are also limiting the rice. So the rice and the essential, agriculture sector, all these things, it will take a ripple back, because now we start to see the supply chain, because I was in procurement, supply chain management and all this. So now the top supply chain are not doing well already. Sooner or later, it will trigger down to us consumer one. Consumer is always the bottom one. Okay.
Yeah. The rice that I normally buy is about 25 ringgit and 90 cents. Yesterday I went to the supermarket, it's already at 31.20.
Yeah.
Yeah.
Today I went to the supermarket or to the hypermarket to shop. Everything's so expensive now.
Yeah.
Okay, so I think this one also just to double check on our yearly forecast. We also forecast that the weather condition will impact the crops, and the crops will impact the inflation. So the same thing. Okay, so and at the same time, while on the book subject, we will also release another book. It will hit the major bookstores. Maybe around mid-August to September time frame. This is a pre-launch that we are excited to share with our viewers here, our audience here. The book is entitled Unlock Your Wealth Potential. So we will go into harness the power. We will use the Chinese astrology and also global trends to forecast the upcoming 5 years, that what elements will perform well and what period 9 means from the aspect. I know that some of you has followed some gurus in Chinese metaphysics, but here we will combine these two methods to predict the trend for the next 5 years. Okay, so it will give you even a more comprehensive views on the on the global trends itself, that in relation to the Chinese metaphysics part of the period 9. Okay, to get support us here to read our book. Yeah. So next, without further ado, we go to the month of August 2023's energy. So 2023's August actually is also another pure pillar month, where we have top is Geng, bottom is also Geng. And if you remember, in February, or I think in January, we have gone through the Li Chun chart for 2023. And we know that Li Chun chart itself has no metal. Okay. And this year, the day pillar or the base energy for this year's Li Chun chart, or people call it day masters, but I prefer to call it as a base energy. At the stem is Hui water or small water, and this small water represents every human being on this earth. Okay, and also because metal in the 5 elements energy cycle, metal creates water, and we have no resource. That's why almost everyone is also having like a very challenging time as the years goes, as the years unfold. After July, I think till the end of this year, we are going to have quite a challenging time also. So, and now because there's no resource create, and also means that resource also could mean supply chain from the global trends perspective. Okay, so
Evelyn, I want to add something here.
yes,
I think one of the key issue is that with this high interest rate environment, a lot of companies are not investing in expanding resource extraction, and because in order to, and also because of the ESG policy, which forbids the bank from supporting those that are extracting oil or extracting the fossil fuel. So what we are facing is that high interest rate, even in the mining side, people it's too expensive to invest in developing a mine. And on top of that, the ESG policy is prohibiting banks from supporting the fossil fuel community or the fossil fuel sector. So at the same time, because of many years of abstraction of resources, grades that come out from the mines are actually much lower, which means that whatever that they continue operating from, the resources are not as much as they used to be last time. And to extract more of it, they need to invest into deeper mines. But again, because of high interest rate, those miners, they are also very reluctant. So all this actually goes to show how the Fed interest rate hikes here is actually causing a lot of supply chain
Ripple
problem
effect,
as
yeah.
well.
Ripple
In
effect
fact,
to the supply chain.
in fact, yesterday, one 90-year-old company called Yellow in US, which is actually one of the biggest so-called distribution distributor of goods. They filed for bankruptcy because of high interest rate, because there are so many fleet of trucks that need to be refinanced.
Finance and maintain.
So that's why they actually filed for bankruptcy. I think there'll be some thousands of people will be out of job. And because you have one major player in the forwarding industry that is taken out, then there's no one eagerly to step in, because they also cannot afford to, because of the high interest rate. The vehicle payments right now, have skyrocketed. If you take up a loan to buy a vehicle or buy a truck, the amount of monthly payment has skyrocketed. So there's no one with enough money to come in and, let's say, absorb the entire fleet of trucks. So that means that supplies would be much slower going into the market. And if, let's say, that happens, then lesser consumer goods available, then again it will be inflation again.
Okay. So so this is this is the case here. So right now we see the resource that doesn't mean that it will ease us. In fact, the resource suddenly comes out, it will be under attack. It's pure matter energy. That means the fire in the chart is going to attack this resource. Remember, we see a lot of fire in the day and also in the hour of the Lee Chun chart. That fire is going to burn that metal. So financial institute again will come out, will have some attention. There will be trouble in resources and supply chain, as explained already by BC, using his global trend research, which correlate to what the findings here is aligned. And also human rights movement is also escalated. This is more for the period 9, where people also want equality, and also health related disease, emergence of disease also could happen in this month of August. Okay, the month hexagram for August is 29, which is water. Is a pure hexagram also. Okay, water actually, in terms of the meaning of this hexagram, it represents adversity and danger, because water hides a lot of dangers you do not know. Okay, and suddenly the news there will be sudden news that could impact economy, and people needs to adapt to the changes. And water sometimes they flow, they have no direction one. So that means that there is a lot of uncertainty that is awaiting. Okay, so I think over to you, PC. Any questions on the Chinese metaphysics, or maybe I'll wait till later when we have Q&A, then we will answer the question. That will be better lah, huh? Okay, so PC, over to you.
Okay, so okay, let's go to what actually happened in July. We make some prediction which didn't fall in place. For example, despite the extreme valuation in major tech stock, the stock market continued to power higher amid weakening economic indicators. We were actually forecasting that there'll be some up and downs. Okay, but then it seems like the whole month of July, the stock market just kept going up. But that also shows that that the stock market is entering extreme greed. And one of the things why the stock market went up was that there were a lot of last-minute fund managers that went to chase the tech stocks. So again, those fund managers, of course, they were actually getting a lot of funds from the public to hit the technology sector, and that caused the stock market to actually go up. But meanwhile, the underlying fundamentals of the economy is actually deteriorating at a much faster rate. It's just that people is driven by greed, okay, and not so much by potential danger. So it's very common during the in the melt up of the stock market, like what happened during the dot-com bubble, where companies that are, they are not worth so much, but then suddenly they are worth so much. So Europe saw inflation falling. We actually predicted that inflation will actually remain quite high. So inflation fell in Europe as the price of commodities declined. So we actually expected inflation to remain high. So after reading about one of the reasons why food actually came down was because in the Ukraine deal, which Russia signed with Russia and Turkey agreed upon, was that the grains from Ukraine were allowed to leave to be exported to the poor countries. But in a UN report, more than 70% actually went to Europe. So only 3% make it to the poor countries. So that's why Russia repudiated the continuation of the grain deal, because it only benefited Europe. And Europe, they just hawk the, use the grain and the food from that Russia allowed to be passed through. Okay, Europe was the main beneficiary. So that was one of the reasons why Europe saw its food price falling as well. Now, we also expect the Fed to pause because of series of poor indicators and lower inflation in June, but the Fed continued to hike another 25 basis points. Now, I think Powell himself is very adamant that he wants to bring inflation down to 2%. So I don't think the Fed would be willing to cut interest rate unless the damage is very, very severe. And for the damage to be very severe, it means that we may not see a rate cut this year or even next year until towards maybe the second half of 2024, which I think then the recession will prove to be very, very deep. So where we got right, now we actually anticipated that crude oil would rise because of the OPEC production cut kicking in. And to date, it has up to 25th of July, it has increased by 11.4%. So we also predicted there will be further weakness in the CRE, commercial real estate market. And what happened was that Starwood Capital Group warned that the CRE space is in a Category 5 hurricane. Now, just as Starwood actually defaulted on a $213 million loan shortly after the CEO said remark, okay? And McKinsey warned that 800 billion of office space in just 9 cities could become obsolete by 2030. So US bankruptcies surged 68% in the first half of 2023 versus first half of 2022. So we also predicted there will be a lot of bankruptcies. We also forecast that major brands could face financial challenges due to their woke business model. So Disney have a string of failures, and Disney just announced it intends to sell its non-core assets. So the company need to dispose of its assets because its business is floundering. And it's so sad to see that Disney is promoting the gay pride philosophy in their theme parks. Okay, so that turns off a lot of parents because they do not want their children to be influenced at a very young age. So Disney visitorship also fell. So this goes to show that because of this kind of skewed belief, okay, of entitlement, it actually can destroy a company. Another one is actually Bud Light. That company also saw its shares losing tens of billions of dollars because they use a transgender to market the beer for a male-dominant community. So they actually boycott the drink, and that company actually lost tens of billions of dollars. So again, I think since late last year, we already forecast that Germany would go into rapid deindustrialization. So we make our forecast, this is German PMI, yeah. When we wrote the book for last year, for this rapid year, it was somewhere around towards the end of 2022. So we forecast that Germany would actually see rapid deindustrialization because of its wrong policies, okay, that wants to ban Russia oil, Russia gas, that where it relies on for the past few decades to grow into an industrial might. So with that gone, okay, Germany have no longer cheap energy, and it's only rational that its PMI should collapse, and it has plummeted to 38.8. So again, we say that demonstrations will continue unabated in Europe, and more incidences of violence, especially in France. And throughout July, I think you're whether through Twitter or YouTube short video, you have seen a lot of the violence in France, so much so that I think later this month that the French actually ban all internet access through some of the social app and all those, that we no longer see all this, okay, but occasionally some videos do come out from there. But again, we see that there's a lot of racial violence, okay, in Europe, where due to a lot of immigrants coming in, they have their own culture, and they are not readily absorbed into the society, and because of the falling in living standards, have made people suspicious against each other, and therefore there's also outbreaks of violence, racial violence in Europe as well as in the US. US is even worse. You have people that are robbing, retailers. So long that the amount is not exceeding $950, they need not go into jail. It will be treated as a misdemeanor, and that caused a lot of people to continue robbing the retail outlets. So much so that supermarkets now, they actually do not display as much goods, and if you want only at the counter, they will give you the goods. Okay, so it's very bad in a sense that all these things are actually hitting the Western nations. That's what I call society upheavals. And that could be very bad for the economy eventually, because you have people who do not want to work but keep on robbing because it has become a way of life. Okay, and then we predicted that China Q2 GDP would be strong based on our analysis of the power consumption and the movement of traffic in China during the second quarter. So another thing that we also say that China would actually take a lead, okay, in beating other brands. So China exported a total of 534,000 new electric vehicles in the first half, expanding it by 160% year on year. So BYD has surpassed Volkswagen as the #1 car brand in China. So you can see that BYD is beating Toyota, Honda, okay, and Volkswagen. So we actually mentioned in our, if you go back to our July prediction, we actually say that Chinese brands would actually move up and overtake the foreign brands. So silver continued to be drained from the SFE, COMEX, and LBMA. In mid-July, the SFE, or the Shanghai Futures Exchange, silver stocks fell dangerously below 1,500 tons, and that is because within this first half of the year, China has doubled its solar panel installation in just 6 months. Okay, and that actually requires a lot of silver, and that's why silver is going to be a metal that will be in huge demand as the Western nations, okay, Europe and US, need to expand their solar power. Okay, and not only that, recent studies from Korea and Japan they also did some research on the solid state battery, and one of the primary conductor within that battery itself is silver. So there's going to be a lot of demand for silver, especially I think over the next few years. You know, in the book we talk about, you know, how the new technology would change and how it will benefit certain industry. And one of those industries is actually gold and silver, because of the demand of new technologies. So let's look at the US economic indicators. The CPI came in at 0.2% month on month, and year on year it grew 3%. Now the fall in the CPI is due to the continual release of stocks from the SPR. And the SPR oil stocks have fallen 41% since February 2022. So of course, Biden would like to say, hey, you know, we managed to fight inflation, you know, it's all political grandstanding, okay? But actually they are using the strategic petroleum reserve to continue to flood the market with their oil stocks so that it keep the price of oil down. In fact, if you look at the components of the CPI in the US, one of the major reduction is actually in energy, falling about 26%. So if you look at it, energy is what really makes the entire economy ticks, okay? Whether it's manufacturing, mining, production, all requires energy, okay? And if let's say energy cost is kept low, okay, then you have lower inflation. Of course, I think the other thing why the CPI is low is also because in calculating the CPI, the Federal Reserve or the Bureau of Statistics, okay, does not take into consideration one factor, and that is called shrinkflation. I'm sure a lot of you have bought some food, okay, especially I bought Pringles here. The tube is still the same size, but when I open, it's only 70% full.
Oh.
Okay, so that is what is called shrinkflation. Okay, contents are much lesser, but then the price is still the same. So what happened is that, you know, when you calculate the CPI, you just look at the price. You don't look at the quantity of the food inside. So what happened is that if a lot of industries, they are looking at shrinkflation because it keeps the consumer happy, okay, that there's no increase in price. But then, you know, the consumer, by right, you know, they can consume 1 packet per week, but then right now they may need to consume 3 packets for over 2 weeks. So that is why shrinkflation is hiding the CPI. And because as long as the CPI is low, then in calculating the GDP, you know, as a deflator, then the core CPI, you know, as a deflator is kept very low, so that then you have the GDP that is boosted higher. So that is how, you know, if you ignore certain things, you know, you have a better picture. But underlying it, that is why, you know, people will cheer. Wow, US GDP growth is 2.4%. Okay, but of course they manipulate the CPI. Okay, just before the end of the first quarter, the Fed actually did a review of calculating the CPI, okay, and the core CPI. So you can know that there's some shenanigans behind it, okay, so that it reflects a better GDP eventually. So this is how some figures are manipulated, just as they manipulate the low unemployment rate, okay. So I've already talked very frequently about it, okay. So if you are interested, I'll talk more in the Telegram, just let me know. So core CPI came in at 0.2% month on month in June. Year on year, it grew 4.8%. So core inflation remains sticky. And because of that, the Fed actually intention wants to keep the core at 2%. Okay, PPI came in at 0.1% month-on-month in June. Year-on-year, it gained 0.1%. So CPI fell because of the fall in the price of commodities as well as energy. Now, retail sales came in at just 0.2% month-on-month in June. Year-on-year, it gained only 1.5%. So with CPI at 3%, retail sales after adjusting for inflation is actually negative territory at 1.5%. So if we want to look at the CPI in this sense, then, retail sales is actually down. But how the Fed calculate it is such that when they calculate the core, they actually left out certain things like food and energy. Okay, so if let's say assuming that right now price of oil has gone up, okay, by right the CPI will go up, and then the core will also go up. But because energy prices have gone up, they use the core excluding energy and food, so the core will actually be lower. So when they calculate the GDP, it doesn't take into consideration, okay, of the energy and food, because the inflation has gone up high, but they exclude it. So that's why then, your GDP is look much better. Okay, so this is how how they game the whole system. It's just like in the stock market, when times are bad, all the analysts will actually have a very bearish earnings expectation, purposely bring it down low, so that even though that they have a fall in net profit, they have a fall in revenue, it's still a beat. Okay, they still beat the analyst estimate, and then the stock price goes up. So this is again, is after looking at the US market for almost a decade, okay, I already know the way that how the analysts behave, okay, and how the algorithm focus on the news network, that just read the headline and then everything looks good. Just as the employment report, okay, they say that they gain how many jobs and all those, and the algorithm read the headlines, and then the stock goes up higher because employment remains high, and then everyone start to be very bullish. But after the following months, all the jobs gains have been adjusted lower. So throughout the 1 year, jobs gains have actually been revised 1 million lower. But no one cares, because at that instant when the headline comes out, the stock market is driven by the algorithm. So then it push up the price higher. But when they revise it down, the stock market just ignore it. So that is how, the whole thing is being gamed. And industrial production came in at negative 0.5% month-on-month. June, it fell 0.4%. Now, industrial production is an essential part of the manufacturing sector. So the manufacturing PMI is also in contraction below 50. So this goes to show that manufacturing is badly affected in the US. The National Association of Home Builders, NAHB index, came back into expansion at 56. The shortage of homes is giving the builders added confidence to build new homes. Now, why is it? Why? Well, more than 70 to around 80% of homeowners in the US, they actually lock in their mortgage at a fixed rate over the last few years. So that time the Fed hasn't increased interest rate. So their mortgage rate is very low at 3%. Right now, the mortgage rate is 7%. So these people are unwilling to sell their home, because the moment they sell their home, they have to pay a 7% mortgage. So that is why existing home sales actually came down, because no one wants to sell their homes. So because there's a demand, but there's not enough homes, that's why there is a demand for new homes, and that's why the builders are very confident that they will continue to build new homes for the buyers. But anyway, housing starts declined 8% month-on-month in June, while housing permits declined 3.7% month-on-month. So there's a bit of good expectation, but then there's also a bit of a downtrend, because in the month of May, both the housing starts and housing permits shot up very, very high. So it's only reasonable that there's a correction. So existing home sales declined 3.3% month on month. Year on year, it fell 20.3% because there's no one who wants to sell their home. So that's why existing home sales decline. So now there's some signs of distress in the US housing. Now, if you look at it, this is two charts by Nick Gurley. Okay, you can follow him on Twitter. He has very nice and interesting charts. So mortgage applications have fallen to 152 here, well below the 170 reached during the aftermath of the housing crisis. So the people are no longer applying for mortgages, are less willing to apply for mortgages because the interest rate is so high. Okay. Then another thing is debt to income ratio of home buyers have reached an unprecedented level. The ratio now stands at 40%, higher than the 39.1% reached during the housing crisis. Okay, so before the housing crisis, it reached a peak here and then it started to fall. Right now, we are at 40%. So although there is some demand for a house, and I think the Biden admin also did another stupid thing. Okay, they say that those people who have very good credit score need to subsidize those people with poor credit score to allow them to buy a home. Okay, so that is why, you know, it's like last time what happened during the housing crisis, people who cannot afford, but because of the cheap and promotions that are being launched, the cheap interest rate, it pushed them all to own a home. Only that when interest rate rise, all of them have to go for foreclosure. But right now, the Biden admin is doing something similar. Those with good credit score, okay, they will see their mortgage increase slightly, and whatever that is increased will be used to subsidize the people who cannot afford. So again, this is voodoo economics, what we call it. So then that distress will spread across the commercial real estate market. So as I mentioned, Starwood just defaulted on a $213 million commercial loan. Okay, and One South Street in downtown Baltimore was sold in June for $24 million, 63.6% discount versus its original purchase price of $66 million. Now, what is going to be a time bomb is that $1.4 trillion of commercial real estate debt need to be financed by the end of 2024, and those that have their loans due, they actually borrow that money when interest rate was very low in the aftermath of the financial crisis. Okay, most of them during the after the global financial crisis, they actually take up loans that is very cheap for about 10 years, 20 years, okay? And all this would become due, okay, in the next, between this year and next year, and that's 1.4 trillion. So we will see more commercial real estate goes under, and if let's say a lot of them goes under, where the major bulk of the loan is being carried by regional banks, the smaller banks, then you see a lot of smaller banks. We are not going to see the four previously, okay? Silvergate, all those smaller banks. Those are not the only four. We are going to see much more, okay? And if that happens, then we can see an unraveling of the banking system in the US.
Yeah, this was also predicted in the month of August energy, that metal also represent banking industries.
Yeah. So, and right now they have increased it by another 25 basis points. So another thing is that the US leading economic indicators, or LEI. So every decline in the LEI has preceded the decline in the GDP. So you can see here how the LEI has fallen, okay? And right now we are at this stage. When previous recession were at this stage, they are already in recession, as you can see here, okay? Right now here is deeper already, but still no recession. But at last time, you know, at this level, most of them already have hit recession, okay? For example, here, okay? But right now we are already deeper than that, still no recession. And that's why, you know, it's all driven by optimism, okay? And of course, the other thing that no one's talked about is that since lifting the debt ceiling, the US Treasury have issued more than $1 trillion worth of bonds, okay? And that bonds ultimately goes back into the financial system. And with this money, the banks are able to leverage, let's say, you know, like they buy the US Treasury, okay, from the US, they buy the US bonds, okay, from the US Treasury, then the banks use that amount to leverage 10 times, then throw into the stock market. So that's why, you know, it's still money that is being leveraged into the system. So that is why the stock market continue to go up. And one of the key things is that also the reason why the Fed will never be able to defeat inflation. Because if you want to fight inflation, you need to cut spending. But the government is spending much more than ever before. And because of that, okay, the Fed will never defeat inflation. So in the LEI actually fell 0.7% year on year in June, down from 0.6% in May. Now, if you look at it, there's always been a recession whenever the LEI has reached this low since the 1960s. So we are talking a lot of recessions of historical in history, which support a recession is definitely built in, okay? But because of that, because of the optimism, people just choose to ignore it. So again, this is the deep yield inversion, which oftentimes signal recession. So at this level, we have the aftermath of the LTC crisis, which is the long-term capital. Then we have the dot-com bubble, we have the global financial crisis, and here is the pandemic, but right now we are so deep inside. Again, that, you know, the longer this is postponed, the worse the recession will be, okay? And if we look at the supply, the money, M2 money supply, the year-on-year decline in the money supply, you know, has never been so deep since the Great Depression. I think a few months ago, we actually talked about this. So this is all pointing to something that when it, you know, bursts, you know, like Evelyn say, you know, the water looks still, but bubbling beneath is actually a huge bubble that when it rises to the surface and bursts, okay, then it will create ripples across the pond, okay? And that is when we see, you know, one sector affecting another, and then suddenly becomes, you know, a domino effect. So there are more bankruptcies that are coming in. US bankruptcy surged 68% in the first half. At least, now in another survey, okay, at least 55 American-based companies defaulted on their loans in the first half of 2023. And that's according to Moody's Investor Services. That 53% increase from the total number of defaults in 2022, when just 36 companies said they would fail to repay their debt obligations to lenders. So, you know, this is one survey and this is another survey, but all pointing towards a surge in bankruptcies. So what happened in a bankruptcy? People lose their jobs. When people lose their jobs and they have a lot of debt, they are unable to pay off their debt. So the people becomes delinquent, or they will be in default. So if they are in default, what the bank does is that if they have a house, they can foreclose. If let's say they have nothing else, Okay, the person will be homeless, but the banks will be left holding the bag. Okay, which means they have to cut it off as a loss. So the more of this happens, then the more that the banks would actually have risk. And this is another interesting chart. Okay, and this chart is telling us why there will be an issue moving forward. Now, this is US defense spending in white. All the while, a lot of people were saying that the biggest component of US spending is actually defense. Well, things just changed at the end of Q2. Interest payment on federal debt has exceeded defense spending. And based on the latest data at the end of Q2 2023, total debt over a 12-month period paid towards the end of Q2 2023 amounts to $970 billion. That means rolling forward to Q3 2023, that 12-month rolling forward, total interest paid will likely exceed 1 trillion. Now, if you look at it, the US total tax revenue is about 4.5 trillion. If let's say the interest payment has exceeded more than $1 trillion, that means close to 20% of the US tax receipt will be used to pay interest on debt. So even more interestingly is that the US Treasury Department will have to issue even more debt, especially when more than 40% of the total debt needs to be refinanced in less than 2 years. Now, if you want to read in detail, you can go to my Facebook page under the title US Debt Madness. I think my post was early July. So there I actually make a calculation, that whatever the US spent, whether it's Social Security, Medicaid, defense, interest payment, after minusing everything, the US have no money left to pay any debt that matures. Okay? That means any maturing debt has to be borrowed by another debt. And right now, we say 40% of the total debt needs to be refinanced. So that means this 40% of 32 trillion, that is the current US debt, 32.5 if I'm not wrong. 40% means close to about 13 trillion new debt need to be issued in 2 years. Then you add 32 plus 13 trillion, that is 45 trillion. So in 2 years' time, US debt will hit 45 trillion. That debt will continue to roll over because they can never pay down the debt because they have nothing left, okay, to pay off any maturing debt. So, and another thing is that the US Treasury has been issuing short-term T-bills at high interest rate. That means that new debt issues will carry high interest rate. They actually are going for short-term rather than the long-term bond of 10 years or 30 years, okay? So most of it is actually in the short term, which is from 3 months, 6 months, or 1 year. And those interests are actually at more than 5%. So this is already telling you that in the next 2 years, the US debt will actually skyrocket. Now, that means the US, of course, will say we will never be in default. Well, they will not be in default, but the amount of debt that is coming out, okay, the US dollar would gradually lose its value because nobody wants to own them anymore. Because, it's constantly become a risk. So that is one of the reasons why I think moving forward, the Fed and the US Treasury would actually be at odds with each other because the US Treasury need to issue even more debt, but based on such a high interest rate, they will need even more debt to pay for the interest, okay? And right now, the US is actually borrowing more because they are expanding their support to Ukraine, okay? And also they are preparing for war with China. Okay, and that means that their defense spending would actually keep on increasing as well. So that is one of the reasons why we have this de-dollarization and BRICS attempt, okay, to de-dollarize so that it bankrupts the US government. So if let's say China and Russia and other like-minded countries like Iran, okay, who has joined the SCO, Saudi Arabia would likely join BRICS as well, and a lot of OPEC countries are going to apply to join BRICS. So if they can actually collapse the US, then probably we will actually avoid a war. Okay, so what could happen to the US in the month of August? Now, oil price will continue to rise as Saudi Arabia extends its 1 million barrels of oil per day production cut in August, on top of the previously announced production cuts by OPEC Plus announced in April 2023. So August will continue to see that there's lesser oil being supplied by OPEC. So inflation will get its second wind. Now, CRE market distress widens, hurting the regional banks. A second banking crisis will shake the Fed's resolve to keep interest rates high. Defaults and bankruptcy among US companies worsen, more layoffs by major corporations. A number of tech companies' earnings will disappoint as global inventories of chips continue to build amid sluggish business. Investors would reassess their positions and look for opportunities in value versus growth. So Texas Instruments announced their quarterly report last week. They actually reported a drop in revenue, okay, and Netflix also recorded a drop. So, but then Google and Microsoft and Facebook actually outperformed. So it's going to be quite a seesaw. But I think the chip industry will see greater damage because Samsung saw its net profit falling 95%. TSMC saw its net profit falling, I think, about 15 or 20%. So the chips industry has become overstocked with chips. And that is why NVIDIA, Intel, and Qualcomm actually went to the White House to ask them to stop sanctioning China. Intel even said that if you continue like this, without the Chinese market, there's no reason for us to continue building fabs in US because there's no market. Okay, so retail sales will weaken as consumers run out of cash to spend. Economic indicators continue to worsen, saddled by high costs of borrowing, record level household debt, and resurgent inflation. So US interest on debt to exceed 1 trillion a year, and US debt will go parabolic. Now, let's look at economic indicators in Europe. Germany continues to see rapid deindustrialization, already mentioned just now, at 38.8. So IMF forecasts Germany will have a recession in 2023. So we believe that European nations are at risk of a recession due to unprecedented credit tightening by the ECB. So you can see that they did a survey, ECB survey, okay, in demand for loans for enterprises. So you can see that because of the credit tightening, people are no longer interested to borrow money. So you can see the plunge here. So that means that without credit, there's no economic growth. Now, for those who have followed me for quite some time, I have always mentioned the entire economy ever since the US had gone out of the gold standard has been driven by debt. Okay, so much so that the debt currently is 3 times the GDP growth on a global scale. So that means that if there's no credit, there's not going to be GDP growth. And that is why recession will actually happen, because all previous GDP growth has been driven purely by debt. Okay, now the current demand for loans in 2023 is much lower than that during the depths of the global financial crisis in 2003 and 2009 and Europe debt crisis in 2012. So you can see here, this was during the So here you can see this one was during the Europe debt crisis, and this was during the global financial crisis. Now, this is actually very deep, but you can see here, this is deeper. So Europe is doomed to have a deep recession. So Europe economic indicators, you can see that CPI came in 5.5% year-on-year in June, down from 6.1% in May. Retail sales came in at negative 2.9% in June, unchanged from May. Adjusted for inflation, EU retail sales is negative 8.4%, okay, because inflation was 5.5%. So UK CPI came in at 7.9% year-on-year in June, down from 8.7% in May. UK retail sales came in at negative 1% year-on-year, up from negative 2.3%, but adjusted for inflation, UK retail sales is down 8.9%. EU manufacturing PMI fell to 42.7 in July, from 43.4. So you can see deteriorating conditions in EU manufacturing. So UK manufacturing PMI fell to 45 from 46.5 in June. So you can see that manufacturing jobs are disappearing in Europe. Meanwhile, the EU and UK continue to see deterioration in living standards, leading to societal upheavals in some countries. Now let's take a look on Europe debt, okay, which I think is a ticking time bomb. So these are the countries in Europe which have debt of more than 100%. But UK is very interesting because UK throughout the past few years have seen very, very low interest rate. In fact, their interest rate before the hike was around 0.1%. And right now, with its current interest rate at 4%, the 10-year yield, okay, has risen 39.6 times in just 3 years. France, 15.9 times on 128% debt. Italy, 173 debt, but just 3 times. Why is that? Because Italy's interest has always been high because it's one of the weakest link, okay, together with Greece and Portugal and Spain, okay, in the EU. So that's why their interests have already been high, and when they continue to hike, okay, the difference is not too great, okay. Belgium, 124% debt with the 10-year yield rising 14.8 times. Greece, 229% of GDP and 10-year yield rising 2.5 times. Portugal, 145%, yield rising 8.1 times. Spain, 135%, yield rising 9.5 times. So you can see that Europe is actually in a lot of trouble. Now, this is going to be a policy error by the ECB. Because of credit tightening, the ECB will cause EU to enter into a deep recession or worse. Now, this is the money supply, M1 money supply. You can see that when the money supply dropped to here, and this was during the pandemic, it dropped so steeply. Now, this was during the global financial crisis, okay? M1 money supply just dropped here. But right now it's dropping all the way here, the deepest since 1995. Now, if we look at that on a perspective that there's credit tightening, okay, there's no money growth, I think the ECB will enter either into a deep recession or a depression. Now, just as the price of commodities are rising, it will put pressure on the ECB ability to tighten further. Meanwhile, ECB announced that it will not be paying any interest for reserves held at the bank by other central banks. So in other words, the ECB is broke. So what could happen in August in Europe? Increase in energy costs will weigh on Europe's economy. The lapse in the Ukraine deal will affect Europe as it has been one of the major beneficiaries of the deal, with only 3% going to the poor countries. Olive oil has also risen to record high. Excuse me. Now, therefore, we will see a resurgence in food inflation and an overall increase in the CPI. Among the most heavily indebted nations in Europe, UK saw the biggest increase in 10-year yield, suggesting that another pension crisis is on the horizon. Now, during the last pension crisis, when the 10-year yield was at that level, it created a panic, okay? And because the pension system in in the UK could go bankrupt. But right now it's much higher than that. So I think, they are just equally worried. And I think the 10-year yield having risen 39 times, it will create a pension crisis in the UK. More countries could see deterioration in living standards, leading to an increase in social unrest. Bankruptcies will be on the rise in the EU and UK as companies grapple with the increase in borrowing costs. Now, besides Germany, UK, France, and Italy are prime candidates to see a recession. Another worrying trend is the negative equity in the number of negative equity in the European Central Bank. Now, the ECB actually has negative equity, which means its liabilities is more than its assets. So this again will pose another problem. If the ECB is broke, who is going to finance the ECB? So a lot of money already went to Ukraine, and then right now they have to gather their money, okay, to bail out the ECB. So it's going to be a mess in Europe. So where China is concerned, well, China's GDP came in at 6.3% in Q2, while H1 GDP rose 5.5%. CPI was unchanged in June, while core CPI came in at 0.4%. Now, China's inflation has remained subdued, and economists are worried that the current deflation could worsen. So PPI came down at negative 5.4% year-on-year in June, a further 0.8 percentage point decline from May. So China, they are very worried right now of deflation because the cost of manufacturing has gone down, okay, rather than gone up. So retail sales came in at 3.1% year-on-year in June, 9.6 percentage points lower than May. So again, this is worrying because suddenly people are not spending as much. Okay, I think one of the key reasons was if you look back on the news, I think sometime in June, President Xi was saying, be prepared for tougher times ahead. So I think that could be one of the reasons why the people, suddenly the president is saying this, we better save a lot. Okay, so that could be one of the reasons that they reduce their spending. So industrial output went up 4.4% year-on-year in June, 0.9 percentage points higher than May. Services sector rose 6.4% from January to June. Now, in the first 6 months, fixed asset investment rose 3.8% year-on-year to 24.3 trillion, driven by investment in infrastructure, manufacturing, and services. The investment in property development went down negative 7.9% year-on-year to 5.86 trillion. So again, the real estate market for housing and properties related, they are not doing well. Okay, now China exports slumped 12.4% year-on-year in June, while imports contracted 6.8%. So because of the economic downturn in Europe and also the slowdown in US, they are actually exporting less to this country, and that is why some of the manufacturing in China still remains in contraction. I think it's about 48 or 49. Okay, China's survey urban unemployment rate stood at 5.2% in June, unchanged from May. Now, some of the major economic news coming out of China is that the Chinese government introduced policies to support private and tech sectors to soften the reliance on SOEs to generate growth. So, because the SOE in China, they actually accumulated a lot of debt, and I think the government is realized that they need risk takers, okay, to enter into the economy to grow it rather than being a parent and dictating what can be done, what cannot be done through the SOEs. Now, I believe that this is the right approach, as SOEs tend to err on being on the safe side and becoming too reliant on debt and less open to financial instruments to fuel growth. So every time the SOE, they want to do something, they always rely on debt. And that's why some of the SOEs' debt are very, very high. Now, China is trying to rein in all this and even allow some SOE to default, actually. And one of the reasons is that but whenever the SOE default, it invariably will hurt the government because of reputation, because of some of the projects may be deemed too important and they have to step in and bail it out, okay? But if let's say the risk taking is given back to private sector, okay, and to tech companies, then they would always want to do well, okay, because they want to grow their business. And their objective is to get listed and make a lot of money. So I think they are giving a lot more leeway for the private enterprise, especially the tech sector, to continue to grow, okay? And I think that augurs well. Just in time that I think recently the Hong Kong index, the HSI index, has seen some positive movements, okay? And for those who follow me on Telegram, I talk a bit on one particular stock that is going to start its electric vehicle. I think the share price actually gained quite substantially over the last 2 days, simply because of the friendly policies towards technology, and also because of the craze over electric vehicles in China. So the government also intends to roll back on some of its restrictive policies on the real estate sector. So they will, although one of the key things is not to allow the real estate to become super hot due to speculation, but I think they would roll back, okay, to allow some expansion, okay, expansion of building of the real estate, building of homes by the developers, okay. And I think one of the missing statement that they mentioned was that there's no word about speculation. So that means that the government may want to sit back, okay, and watch the real estate market recover some of its glory, okay. But I think that the moment the speculation becomes excessive, the government will actually comes back in, because ultimately they want to have people to own home, not so much for speculation. But I think rolling back some of the policies might allow people to own home for those first home buyers and such. And one of the issues that I've often highlighted is that is because of the expensive cost of starting a family is what driving China. A lot of people delaying their marriage, okay, and not having children. So in order to have the population growth back on track, the government need to have some policies that encourage home ownership so that people can start a family as soon as possible. So I think it's a combination of philosophy on whether you want to have a higher population growth, or you want to keep a damper on speculation and such. So it has become a policy that will be rolled back and then implemented again, as situation changes. So the other thing is that the installed capacity of renewable energy in the first half of 2023 reached about 1.32 billion kilowatts, surging 18.2% compared to the same period in 2022. Most notably, total investment of major power companies in solar energy soared 113% year on year. Now, this is one of the reasons driving the withdrawal of silver stocks from the Shanghai Futures Exchange. Now, some 24,000 new foreign firms established themselves in China in the first half of 2023. marking a 35.7% rise in year-on-year. However, FDI in China mainland did 2.7% year-on-year to 703 billion renminbi. So a lot of foreign firms are starting, they are starting their business in China, but then I think also due to constraints of capital, the amount invested, has declined slightly. So total power use in China rose 3.9% year-on-year in June to 775.1 billion kilowatts. So whenever there's power increase, often highlights that the economy is still thriving. Yeah, China saw about 2.24 million passenger vehicles sold in June, of which 1.2 million were domestic brands, accounting for 53.7% of domestic market. China exported 1.68 million passengers vehicles in the first half of 2023, which is a 92% year-on-year increase. Now, China's EV and NEV market is expanding overseas at a very rapid rate, especially in Southeast Asia. So in June this year, 70,000 new energy vehicles produced by Chinese domestic brands were sold overseas, up 185.3% year-on-year. Now, recently, Volkswagen announced establishing a joint venture with XPeng, and Audi will have a joint venture with SAIC Motor to develop EVs. So the technology in China is so advanced, that even established player in Germany, Volkswagen and Audi have to join venture with China in order to develop new EVs. Now, the introduction of solid-state batteries will result in low cost for the EV manufacturers. So China's tech sector, Huawei will start producing 5G chips as early as this year. The chips will be designed in-house by Huawei, while production will be done by SMIC. Not stock advice here, but if you know what is the message behind here, then you will know what kind of stock to buy. Okay. Now, Huawei is expected to start production of 5G smartphones in 2024 before getting banned and denying its access to high-end chips by the US. Huawei briefly held the position as the world's largest smartphone brand in July 2020. Now, assuming if Huawei is managed to rise above the lower end brands, like Oppo,
Xiaomi,
Xiaomi and Vivo, to be among the top 3, then you can know how much chips is being consumed. Not financial advice, but anyway, I do own these stocks. This stock. So China tech sector continue with the energy side now and communication side. Now, Chinese ICT companies are shifting towards quantum communications. So you can see that China's AI and quantum computing is very different from the US. And for those in the Telegram channel, you remember a few months back, I mentioned about if you want to buy tech in the US, look at quantum computing. So hopefully some of you all bother to do the research and bought into some stock, because those that I share in my own in my webinar with Casey Lau, one of them actually has already doubled, from 98 cents to $2.16, and another one from $10 plus to already $16 plus. So hopefully some of you managed to do the research, because there are not many quantum companies that are quantum computing companies that are listed in the US. If you have bought those, then congratulations, because you do it all on your own. Now, but those quantum computing companies in the US, they are looking at promoting it as a service, which means how to use quantum technology in the cloud system. Now, China is different. China is looking at quantum communications, and there's one particular company also listed, a very prominent company in the quantum communications. That is, I can tell it here, ZTE. they are one of the top 10 quantum computing companies in China, and they are looking at quantum communications. Now, quantum communications allow for encrypted communication and allow for seamless transmission of information, because they have certain quantum components within the infrastructure that if certain line is faulty, there is a remedial line, okay, to immediately take over. So they are so far ahead, okay. They also have cloud service, okay, but they want to look at using quantum to improve the manufacturing, improve the transmission of information. So it's all related to improving productivity, okay. Now, another thing that if you are interested, I think in the coming weeks, there's going to be the IPO of BRICS. Okay, BRICS is the China's version of NVIDIA. They are already producing GPUs. So if you are interested in Chinese stocks, okay, you can look out for BRICS. So China just launched its first thorium reactor in June, which allows for nuclear power generation in arid environments far from a water source. So with this thorium reactor, this is the world's first thorium reactor, okay? China can actually develop a nuclear reactor in a desert, because thorium doesn't require water. A thorium reactor doesn't require water for cooling and all those. And another plus point for thorium reactor is that it can burn nuclear waste, okay, to generate power. So China is already leading in that sense. Now, China also launched its first SMR, or small modular reactor, in July 2023. Now, once these SMR are proven to be working, either they will be scaled down, okay, or they'll be scaled to many other cities so that it can take over some of the coal-firing plants, okay, because nuclear is still cleaner energy. So, of course, all this point towards to increased demand in uranium. So what could happen to China in August? Now, China's stock markets, the Shanghai, Shenzhen, and Hong Kong may see greater investors' interest as new policies kick in. So far, the Chinese market has underperformed the US and EU markets, especially, Germany is going to have recession, but Germany's stock market is at record high. So that's the divergence, okay? But China has been, China has been very, has underperformed. So I think another thing is that there is news that the Gulf countries might invest in China's stock market, okay, as they refine the BRICS agenda. So Chinese tech companies, solar energy companies, batteries, and EVs manufacturers especially could see wider investors' participation. Now, exports. I fall here. Except EVs would likely remain weak as the developed economies struggle with slowdown and potential recession. Now, Latin America, Central Asia, Africa, and ASEAN would have to take the slack to narrow the decline for China. Now, China's trade with Russia will continue to grow. Now, one of the reasons also because of China's lower import is because China is importing from Latin America and Central Asia and Africa, which are actually lower cost, especially where it concerns food. For example, the cattle or beef from South America, the wine from South America, the soya bean from South America, the iron from South America, which are actually cheaper when compared to being importing from Australia or importing from the US. So that could be one of the reasons why the import in terms of value also drops. Now, domestic consumption will continue to offset the fall in export. Imports will rebound, although the fall in the value of imports could point to cheap import costs from Latin America as China seeks to reduce its reliance on US for agri products, or China has reached self-sufficiency in other areas to reduce its imports. We could see the real estate market receiving a boost. So if you are a risk taker, you might want to take a punt on some of the developer stock in China. Okay, but I think the risk is still there. Okay, just now we saw that real estate investment is still down negative 7.9%. Depends on your level of risk. Okay, not financial advice. Any strong rebound in China's economy will result in high inflation in other countries, especially if, let's say, China's real estate market rebound. That will increase the demand for cement, increase demand of steel, increase demand of copper. Okay, and that would cause the price of the commodities to rise, leading to higher inflation in other countries, especially the US and Europe. So geopolitics, the biggest event must be the BRICS Summit in South Africa from 22nd to 24th August. It is expected that a BRICS trade settlement currency will be announced. News out of Russia and Iran suggests it could be go-back trade settlement currency. Some BRICS members admonish the idea, stating that it is part of an ongoing de-dollarization effort to trade in respective members' currencies. So there's no real detail yet as to what is it going to be. Now, there's also a suggestion that gold is the BRICS trade settlement currency. So there's no fiat currency, but the BRICS currency will be actually gold. So nevertheless, currency speculators will be observing the summit with bated breath, even though many still see the USD as the king and will not be easily dethroned. Now, a sudden shift in backing the trade settlement among members with gold could shake the currency market, because there's a lot of disbelievers in the Western part, okay, that China can gold-backed currency would work. Okay, they still prefer the US dollar, and some analysts are warning that they might be in for a surprise. But anyway, I believe any change will be gradual rather than sudden. Now, the lapse in the grain deal also involves the shipment of fertilizers and such. It could further affect the production of crops, which could only mean higher food prices. Now, China imposed restriction on the sale of germanium and gallium. Now, both minerals are crucial to the high-tech industry. In fact, Japan actually has an order for the germanium and gallium in the month of July, but the port authorities refuse to release it. Okay, they say have to wait until August, then they cannot get it. Okay, so unless it's approved by the government. So germanium is used in fiber optic products and night vision goggles, while gallium is in critical materials for semiconductors. Now, that is according to CNBC. But gallium is also used in the manufacture of high-tech radars, and that is why the US military now is panicking, okay, that where can they get gallium for the rollout of their radars. Okay, now China produces 60% of the world's germanium and 80% of gallium, and some analysts put China's share at 80% and 90% respectively. That is based on Business Today. As US ramps up sanctions against China, China will likely restrict the sale of crucial minerals to the global market. So China has an entire list of rare earth minerals that it can play to its advantage. And of course, China is the world's largest producer of silicon for semiconductor chips. And we know that all chips are made from silicon. Now, if China decides to stop shipping silicon, then everyone can kiss the semiconductors goodbye. Okay, but China has not played that card yet. Okay, and China can be that nasty if, let's say, it's forced to that corner. So, but all the while, China has been, throwing a bit here, a bit there, but it's already panicking the Pentagon because gallium is used for radars and germanium is used for night goggles. Okay, now another thing is that Intel, Nvidia, and Qualcomm met with Biden admin, urging the Biden admin to soften its sanctions on key chips to China. Intel CEO even remarked that without Chinese market, there is no need to build fabs in the US. I believe whatever gesture the Biden admin would take, it is already too late to reconcile the issue as more Chinese startups stamp their mark in the tech sector. Already, China has a lot of its own national champion in the EDA development, okay? And in fact, there's one particular EDA company in China that is not just developing the EDA equipment itself, it's developing an entire EDA ecosystem in conjunction with Alibaba Cloud so that people can pay a fee and access the information. So that is how a step higher, okay? And of course, Huawei is developing its own EDA. And I think EDA is the very foundation, okay, of any chip manufacturing, because you need to have the design, okay, and the circuitry, and then you do testing before you certify that this is the product that you want, and then only it goes into production, right or not, Evelyn?
Yeah. The front end of the chip fabrication, the front end process.
Yeah. So then although in the before the ban of SML to sell to China, China actually bought the largest amount of DUVs from ASML. So a lot of these DUVs are going to be used in the manufacturing of 7 to 14 nanometer. And because Huawei has a patent for the stacking process, whereby they can stack 2 14 nanometer to deliver a 7 nanometer properties. Okay, so SMIC is also having its DUVs to develop its N+1 processing, okay, to also deliver the properties of 14 as well as 7 nanometer. But I think the major DUV that China has in-house is actually the Shanghai Microelectronics Engineering. It's not listed, okay, but it's a private limited, and it's currently testing 28 nanometer, okay, for its equipment. Now, assuming that it is successful, then I think the next stage would naturally be 14 nanometer, okay? But let's see, okay? Now, the geopolitics in terms of conflict. So, Poland and Belarus are amassing troops and equipment along the border. And recently, the Belarus president trolled the Polish government, stating that the Wagner private military corporation is eager to take a tour in Warsaw. So that panicked the Poland. For those who have followed the Ukraine war, you will know that the Wagner group is a very well-trained mercenary army group, okay? And Poland right now is amassing troops along the border. And there are talks within Washington circle that they will allow Poland to enter into Ukraine, okay, to prevent Russia from capturing Ukraine. Now, that means that there is going to be conflict, okay, because part of the Poland's so-called conservatives or neocon within Poland, they want to revive the Polish Empire, which covers the entire Baltic countries, the Estonia, Lithuania, Latvia, and also a western part of Belarus, okay, and part of Ukraine. So there are talks within Washington circle to urge them, to revive that empire. So that could, if let's say they cross into Belarus, then of course there's going to be a war, and Russia would actually step in to help Belarus. And if that happens, then there's going to be a major black swan. Now, the other thing that US is moving its military asset to the Persian Gulf and into Syria. In fact, US just increased its military personnel in Syria by 2,500 personnel. and they are moving about 6,000 Marines, okay, in the Persian Gulf. So some commentators like here, they are stating that US might want to wage war with Iran. And again, if let's say that happens, I think we are going to see hyperinflation, because the last thing that can happen is that Iran will actually block the entire Straits of Hormuz, and 30% of the global oil would not be able to reach the global. And if let's say that happens, we will see oil in the hundreds of dollars, probably 200 to 300. Yeah. So of course, in Syria, there's increased air engagement between US. US is moving their F-22 Raptors, which they proclaim to be the world's most advanced aircraft, in that region as well. So these are the things that can unsettle the global economy and would cause a will cause a sharp drop in the global markets.